Welcome to the next episode of the Pioneer Mind podcast. Just going to have a great time today. We have a great guest. This guy is amazing, genius in many ways, and has encouraged me more than he knows. So our guest today is Steve Stengel with Encore Energy. And we're going to be talking today again, just continuing that theme about the pioneer mind. I've just kind of been captured by that in our culture. And I feel like in some ways, I talk as a conservative, say I'm a conservative on that political side, is we're trying to conserve and preserve the nation. We're trying to conserve and preserve things that have lasted the test of time, hundreds of years, even thousands of years. And in many ways, a pioneer is a person who starts every story. They're the ones that take the risk, step out and go on the ground no one else wants to go to, And I like the quote by C.S. Lewis that says, when the entire herd or crowd is running towards the cliff, it is the man who is insane that's running the other direction. And I really believe that that's something that's going on in our culture. We've kind of been trained to be employees, to be slaves in some ways. I hate to talk that way, but go to college, finish up, get a degree, work 30 years. And many times you don't last 4 years at any company. So these people are disillusioned. I talk to a lot of young people that are disillusioned. So in my way of thinking, I want to promote this pioneer mind, people taking risks, stepping out, not knowing the outcomes. And what you're going to find out with Steve today, it is flat out, you have no idea. And he'll tell you that. He's taking risks, but it's risks with a lot of data, a lot of education, and just an amazing guy. And I'm just glad to have him here today. So welcome, Steve. And I hope I didn't talk too much there, but I'm just glad you're here. And I want to explore the pioneer mind with you a little bit, but also the idea of what Encore Energy does and teach us about the oil field. And again, I know you will. So thanks for coming.
Well, hey, I'm really happy about being on the podcast, and I love talking about the oil and gas industry, so you don't have to worry about that. I guess to talk a little bit about oil and gas investing and to talk about, in general, the public and investors in oil and gas. The oil and gas industry is one of the largest, I believe it's the fifth largest industry in the world. All right. But it's also very mysterious and it's also very misunderstood. And on top of that, the oil and gas industry over the last decade, and let's say really 2 decades, we have made a strong transition from conventional vertical drilling to non-conventional horizontal drilling with multi-stage fracking. And over decades, we have been targeting conventional reservoirs such as sandstones, limestones, other carbonates, and vertically looking for stratigraphic traps and developing the structural highs and drilling all these different prospects across the United States. And what we see is we've entered into a phase where all of the low-hanging fruit is gone.
Yeah.
And so, with the development of horizontal drilling and multi-stage fracking and what we will call the shale revolution, we've seen major success in the Permian Basin, the Marcellus Shale, the Bakken Shale, the Eagle Ford Shale, and the Utica Shale. So we've seen it in the Appalachian Basin. We've seen it in East Texas. We've seen it in the Permian Basin. And we've seen it in Oklahoma and out west as well. And what Encore Energy does is we utilize the non-conventional methods to drill in what we call tight oil sands. Okay.
Yeah.
And tight oil sands are basically conventional reservoirs that through a certain geological events were flattened and made very much like a shale. And they are high oil saturation with very good porosity. So they hold a lot of oil, but they are low perm, much like a shale, which means they have to have multi-stage fracking to produce. And, one of the...
So it has similar characteristics. They're just two different geological types of geology, I guess,
Yes,
with the same characteristics.
exactly. And your
Yeah.
shale plays are source rocks. So all oil and gas that was drilled out of conventional reservoirs, those reservoirs were formed, the structures were formed, and then the oil migrated from the source rock that's deeper into those structures. And therefore, those
Interesting.
structures were the path of least resistance, and they were very clean and very porous, and most importantly, very permeable. Okay. And so when you have
Gotcha.
vertical drilling and conventional drilling, you don't have to do the extensive frac, etc. You may do various treatments, you may do a one-stage frac, but you already have the permeability to a certain extent. So multi-stage fracking and horizontal drilling would not apply to those types of structures. And of course, those types of structures are highs and lows in the formation, which makes it very difficult to drill horizontally from the start. Okay. So with the sandstones that we're developing in the Appalachia Basin of eastern Kentucky, in certain areas, they are less traditional and they are flatter and tighter, very characteristic of a U.S. shale. And again, they refer to that as tight oil. And in this video, I'll refer to it as tight oil sand. Okay.
Right.
So now in a US shale play, you typically have very thick formations that follow a trend for many miles, but do change over time. You'll hear people say, well, what zip code are you in? Because a US shale formation is typically, when it's productive over a certain area, which is about the size of your average zip code. So when
Wow.
you hear about big companies leasing in certain areas and somebody inquires about their property that their granddad owns, they'll say, the representative from the oil and gas company say, well, what zip code are you in?
Right.
That will give them an idea of its potential, maybe. Now, where we drill, it's not as much a zip code. Okay. This is a conventional reservoir that was flattened. So you have areas in the field that we're drilling, which are strictly gas, and primarily the fields that we are producing and drilling in are traditionally considered gas fields.
Right.
And in those gas fields, they have structures that are high oil saturation. And not only are they high oil saturation, but they are gas driven. So there's no water, no formation water existing in those reservoirs, and your oil is driven by gas. And what we want to make sure of is when we're drilling is that we're in an area that is of high oil saturation and not gas. Okay.
Yeah. And you know that why? How do you
Well, we
know that?
know that through a lot of different tests. When you look at well logs, you can look at them and make a general assumption that something is maybe gassier or has more oil based on temperature curves and things of that nature. But you really don't have a good understanding for the reservoir unless you have mud logs that you can look at and really dig into the lithology of what it is you're drilling and test samples and review them under a microscope and really get an idea of how oil saturated is the reservoir where you're at.
Gotcha.
One of the things we love to do is strat technology, which, the most expensive part of that is we have to go out and we have to drill a low budget vertical well that we're going to drill, log, mud log, sample, look at, evaluate, and then plug it. Okay. And the best way to do it is when you find existing wells that were drilled deeper, let's say to a gas shale zone 50 years ago, and we're able to either obtain an actual well log from that well from years ago, or we just go in and we relog the well and we perform our own evaluation on the well. And oftentimes that means we get to find out, if that well's been sitting there for 30 years, do we enter that well and do we have oil setting in the hole? And is that oil from our target formation? And honestly,
Uh,
those things are pretty easy to determine when you have an open well bore to look at. Okay.
right.
So strat technology only works in this area really because the wells are shallower as compared to your other plays across the country. All right. But one of the things I hear from on a lot of investors is, there are a lot of larger companies that provide them with blind pool type investments and things of that nature, and they concentrate on diversification. And yes, diversification is very important, but what a lot of people forget or don't know from the start is that 70% of the wells drilled anywhere, okay, are not meeting the target success that we want to achieve, while 30% represent about 80% of the oil produced, okay?
Wow. Yeah.
Now, the percentages have gotten better as we are drilling horizontal wells and doing multi-stage fracking, and we learn more about certain plays, and like a play will mature. Okay. And originally in the sands that we're drilling, in the fields that we're drilling in Appalachia, there were hundreds of wells drilled. And a lot of those wells were drilled out of zone. They were drilled incorrectly. They were drilled in an area that had been too much saturation by gas. And over time, not only has technology evolved, but learning has evolved. And you'll see multiple operators going into certain areas, and we're immediately offset to one another, drilling and producing in certain trends. And that's because those trends have been what we call proven productive. You also hear the word de-risked. Okay? That's a good word, but risk always exists beyond just the reservoir. So
I had a question for
mhm,
you.
sure.
Just thinking about, you said you go back 50 years on a well and you're looking for data and information. I know you and I've talked before on the phone
Mhm.
that, that you're just a little digger. You're
Yeah.
hilarious how you just dig, 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 dig. How good is that information that's old like that? Because they didn't have the technology. You talked about gas and oil and how they compete. You taught me that when there's a high amount of gas, you've got to really work it hard to get to the oil in terms of the competition because those two compete against each other.
Right,
So,
right.
but the old information wouldn't have had that. They're just kind of aren't they just kind of pounding holes in the ground and trying to get whatever they can, or
Well,
was it?
you are absolutely correct. And so, to give you an example, where we're drilling, there is a deeper shale that's maybe 500 or 600 feet deeper than our target sand. And our target sand is approximately 100 feet thick, but in that sand are two or three zones. And of those zones, we select one zone that is higher oil saturation, with the other zones being higher gas saturation. Okay. Now there's oil in those other porosity zones, but the saturation is not as high. So we're looking for the right zone to be in, the right porosity channel to be in, that has the really good oil rock. And when we look at these old wells, a lot of them exist because when they were drilling the shale decades ago vertically, their game plan, and it was a reasonable game plan, was to go out and drill as many as they could
Yeah,
on the minimum spacings required by the state. And they would drill into the shale. They wouldn't run 4.5. They wouldn't cement 4.5, and they wouldn't even run a log. They would frack the well on packers on a vertical well. And you really can't kick that because they were drilling so many and giving the return on investment and the reserves and the volumes they saw. They didn't really have it in their budget to do a whole lot. Okay.
sure, I gotcha.
And so, but some of them did. Some companies would log every well they drilled. Some companies would run 4.5 and perforate, which is really the better way of doing it. Okay. So when we go back and we pull vertical well logs, a lot of times we can look at the company and go, oh, yeah, we know they didn't do this. Or we'll see a company, like Chesapeake Energy. They've got wells around here. And when we look at one of their wells, it's like a science project. Everything you want is in that wellbore. Okay.
Interesting. Okay,
Oh,
that's cool.
yeah. Yeah. And so, and a lot of times Chesapeake and other large companies would come into Kentucky and just drill pilot holes, you know, and maybe drill a 5,000-foot well or a 3,000-foot well that gives us a really good look at all the formations. Now, we're not that lucky 90% of the time. Okay. And so the first thing we look for is a well log that gives us data. Okay. And then the well log will give us some data, but most importantly, it gives us a picture of what the reservoir looks like that we can compare to our productive areas. All
Quick
right.
question. Is
Sure.
that information that Chesapeake would be developing on their pilot holes or core samples or whatever and then when they're doing their own investigation, is that public knowledge? It's the state
It
say,
is.
okay, so
It is most
in
of the
some
time.
ways, that not being proprietary is fascinating to me because they have the expense, so but they don't necessarily own the data, which is counterintuitive to most, like an investor like me. You know what I mean? Or even in my company, I had a guy yesterday ask me, "Well, what's the base in your emulsifier? Is it pine?" I didn't know what to tell him because I didn't want to
Right.
tell him,
Right.
because it's somewhat proprietary. We've developed it
Right.
ourselves, and
Well, let me say this. Some companies will come in depending on what they're doing and they'll drill a confidential well and it is permitted and drilled and everything remains confidential.
interesting. Okay,
But then a lot of wells are 20, 30 years old and they just came in and drilled it. And, it was just something they didn't complete for production or whatever. Or maybe they were looking for a different zone. You don't really know what they were doing, but what's
right,
important is we got the data. Now,
right,
so that data, becomes a data point on our reservoir model, and so we'll use all of these wells to formulate not only to give us a good idea of what's there, but to give us an idea of how that structure moves. Because although our target zones are much flatter, which is necessary for horizontal drilling and multi stage fracking, they're not exactly flat. They do move, they're
mm,
conventional reservoirs. They
yeah,
do move, they thicken, they thin, they do different things. So the strat evaluation, the evaluation of other well data, much like navigating a lake and looking at the buoys, knowing where you're at and where you need to be, are you in deep enough water,
right,
depending on what type of boat you're in. Same thing. And then, from an aviation standpoint, when we drill horizontally, we're drilling and we're landing and we're evaluating and we're creating markers so that anytime we look at rock as we're going down, we can plot that on a well log and a mud log to know exactly where we're at in what reservoir and where we need to be.
right, yeah,
And so, these are just little things about how we drill. But before we drill, we are typically focused mostly on closology, which is,
yeah,
where is the trend? And I think you and I were having a discussion one day about it's kind of like the front lines of a war. Is it going to move to the east? Is it going to move to the northeast? Does it move to the south? All indications are based on the success of others and data that it's moving in a certain direction.
yeah. It's
Okay.
like having, in wartime. They always talk about, you look at they get into the room and they have their war maps and they have a 30,000 foot view. They're looking over, they're looking from a high point, and then they got to get down to, okay, this company needs to go here, and so it's a 30,000 point view, and then your closology of, like, what is my competitor doing? What are they finding? What's the data telling me? And you've referred to yourself as a treasure hunter, like, and I think of that as almost like a pirate, a little bit, but you're not a
Yeah.
pirate.
Yeah.
But
Yeah.
the point is that you really are treasure hunting. So
Yeah.
it's an
Yeah.
investigative process that I imagine is a ball. At the same
Yeah.
time, it can be very frustrating. I'm assuming
Yeah.
it's
And
terrible
to go.
stressful.
So what is a treasure? So a treasure is when we can find wells that do not have any well logs, do not have any data. They were drilled years ago. We can't even find out who the operator was. They're an orphan well. Okay.
Interesting. Okay.
They're on an area that we know that we're going to likely lease, okay, because of other data. But to add more points in our system, we will actually plug in the well, save the taxpayer money. But when we plug a well, we will do a little experiment on it. We will open the well up, pull all the steel out if it's in there, and that's always a real pain. But we
Yep.
do that, and then we come in and we'll run an electric log, and then we will come in and play with the well a little bit. We will pressure up on it. We'll move it. We'll see what kind of oil is sitting in the bottom of the well, and did that well come out of an open hole of our reservoir? And that's pretty easy to determine. And we'll play around with it. We'll kind of play with our food before we plug it. Okay,
Yeah.
and we get a lot of data that way. But kind of going back to the investors, and the investment is most companies go out, and because they're larger, they have to create volume of prospects. And what we do is when we drill a successful well, that creates offset opportunities. And those
Right.
offset opportunities then become PUD locations, proven undeveloped, and they increase the probability of success much higher. So we don't really lease a property until we already know we're going to drill on it. And, a lot of times investors will ask all kinds of questions about historical operations and diversification and pricing and, all kinds of good information, good due diligence questions. And they never ask me, Steve, will you show me why this reservoir is going to give up oil and make volumes that are going to be economically sound for this investment?
Right.
Or can you show me that reservoir and show me another well that's being successful and has that identical reservoir signature, and what kind of total volume of oil and reserves is in place, and what does that look like on a cash flow model? And that's what we do. Okay. And so, not to denigrate diversification across many wells, but with the 70/30 rule, if you're drilling bam, 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 your diversification is great, but you're also diversifying across wells that are not high volume. Okay.
Right. Well, I think of a couple of things on this. There's a company here called D.A. Davidson. You probably heard of them. They're based out of Great Falls here, and they're an investment company. And one of their people that represents them, and it indicated to me that for out of every 100 clients that get 90 go away, they only keep about 10. They're only successful
Right.
10% of the time. That's
Right.
how poor it is. So they've got to
Right.
be constantly filling their bucket, right? They got to
Right.
walk the neighborhoods, knock on doors. Do you want to invest? Do you want to invest? So they're just firing people into the funnel of, hey, come join our program because they're losing 9%, 90% of the time. That's how
And
bad it is.
that's when, and people have to understand, vertical drilling and exploration has been very necessary for a very long time. I
Right.
mean, the only way to find oil is to drill vertically for many decades. Okay. And yes, seismic, geochem, geology, they're all just tools. Okay. And so
Yeah.
when they're evaluating a vertical well, you're going to look at all of your tools, but you're going to look at the tools for that particular prospect that are most important.
Right.
Okay. And then you're going to use other tools such as seismic to be more of a confirming method or a
Sure.
tool. Okay.
That
So
that makes total sense.
if you've got a vertical project and you've got sound geology, you've got good pressure in your reservoir, and you've got, let's just say, offset production data that gives you a really good isopac map or structural map, and then you were able to obtain seismic, which reconfirms a structure. Now you're going in a direction that's right. But too many people get caught up just using one tool or picking the tool that gives them the best information when maybe that tool isn't really the most important tool for that particular prospect.
So
Okay.
really, look at, say you have a pie and you have the seismic, you have this, you have data from the history, you have all these
Mhm.
slices of the pie, right? And it actually takes all of those slices to have a pie, is what
Right.
you're saying. You can't
Yeah.
just go off the seismic or you
Right.
can't just go
Right.
off of history because they could mislead you because we're talking about the pioneer mine, going into areas with high risk, not knowing the outcomes, even with every one of those areas it's the truth, is it not? That you still don't know.
You just don't know. I mean, and there's this illusion out there because big oil likes to go out there and talk about satellite imagery and 3D
Right.
seismic and all that, where they make the shareholders feel really comfortable that boy, they just know where the oil's at, and nobody knows.
Yeah.
Nobody knows where the oil's at. Nobody can see underground. All
Well, you
right.
told me what ti you tell them the story you told me about that you when they come and frack and they're doing or maybe it's doing your drilling and the bit, and I think you're in there with a joystick even, right? And you're kind of
No, it's
moving it.
not a joystick. No, it's not
What
a
is it?
joystick. That
How you
that came
how you
That came from the landman, okay? It's not a joystick. You basically have the drilling rig in any horizontal type of project. Now, when you get into the larger shale plays, you get more involved with thicker zones, deeper, more equipment, more people because you got so much steel in the ground, okay?
right,
And
right.
you're using a method of geosteering, which I would consider a more pure geosteering computerized analytic system that evaluates the rock from a computer standpoint. And you drill, and you still have human interaction there and review and everything, but it's easier. I mean, if you can get all of that working, and that works great. Where we're drilling at, like I say, the formations change more. So you have to really be drilling. We drill with the geosteering perspective, but in what I call a manual means, which means we will move up and down despite what something is telling us, because
Yeah, so
something else is telling us,
you're actually doing that in the booth or wherever you're at, like,
right.
you're managing the tip of that thing.
Right, exactly. And you'll have your directional company, you'll have your tool pusher over the rig, and you'll have your mud logger. And really for us, the mud logger is the most important because we're looking at the rock live. We're 60 feet behind the bit by the time we see the rock. So we're looking at the rock and testing the rock and looking at all the characteristics we know we need to be that good, high quality, higher perm oil rock in the lower perm reservoir. And let me restate that. These are low perm reservoirs, okay? But the mythology is that you drill in really bad rock and fracking makes it good. That's not true. You drill in the most permeable part of the low perm reservoir. And when you do that, a lot of people call it the sweet spot. It is the sweet spot. It might be the spot, the area where you're seeing your best porosity, you're seeing your best rock, and that rock test we use certain tests to test the live permeability and porosity of rock, okay, and how that rock gives up oil and what that rock looks like. And does that rock look like that well over there that's been very successful?
Right.
That's what we're doing. And at the same time, we're looking at the drill bit and manipulating the bit so that we're following what we call a baseline target, which would be more like geosteering. But we know that there's going to be times that we adjust that based on changes in the reservoir. All right.
Right. Right.
So we want to stay in that sweet spot. And that means sometimes you go down, sometimes you go up, and sometimes you go back down again. As a matter of
Yeah.
fact, what we do is when we get into our target zone, we're always creating markers. We're looking at a certain lithology and saying, okay, this is here. So when we're this many feet down, this is here. And when we get into our target zone, we'll even go down a little further until we get into the nastier rock that sits beneath it. And we'll scrape through that nastier rock and lift back up out of it because we want to know where that's at and what it looks like. So when we revisit the bottom of the target formation later on in the well, we know where we're at and we go up and we do the same on the top.
Jeez.
Okay. And we call
Yeah.
those markers. All
Yeah.
right. Indicators. And so, you know, from an investment standpoint, we're looking at, hey, let's go after the 30%. Let's go after the wells that are really bringing home the mail. Okay.
Yeah.
And in the trend that we're in, we're doing the same thing that multiple operators are doing, in pretty close proximity to us. And if we don't have a lease next to where we're at and we're successful, if we don't have that lease and we can't get that lease, we know one of our competitors will be there and vice versa. Okay. And in today's world, We work under confidentiality agreements with different operators, keeping everything confidential. And because everybody wants to see everybody be successful when you're in a play, because it's just like a neighborhood, you know? Nobody wants to build a house in the neighborhood and then have one over here that kind of pulls down the value of the neighborhood, if that makes
Gotcha.
sense.
That
You
does
know?
make sense.
Yeah, yeah. So,
S-
and that's a good thing, you know?
you mentioned Landman, and
Mhm.
I think you're a fan of the show. And to be honest with you, I've not watched it, and purposely so, because of Yellowstone. I've shared
Right.
with this video that Yellowstone has caused a lot of
Yeah.
problems here in Montana. Whether you believe it or not, everyone wants to head west and come to this fantasy world, and then when they get here, there's no jobs, no industry, and about 50 ranchers own the entire state, and the rest is owned by the federal government.
Yeah.
It's I mean, I'm over exaggerating, but the point
Right.
of it is that they see these, stream video views of the scenery. It is beautiful. Montana's, I
Oh,
love
yeah.
my state. I love my home. I'm not busting on it, but when Landman comes up, because it does come up, because
Uh-huh.
I own an oil field supply company, so, in my chemical business and stuff, it does come up. The Landman thing does come up. But you've mentioned that you've really enjoyed there's a and I never watched it, but you said there was a part in there that he talks about the renewables.
Yes.
You wanna briefly mention that? It's,
Yeah,
not a
you
promoting
know,
it.
it's
I'm not promoting Landman. I'm not. I'm just saying you said he made a good point, I guess.
yeah, he does. Okay, so this is when he takes Rebecca out to see a windmill, and she
Rebecca.
refers to it as clean energy, and he says it's anything but clean. It's called alternative energy, and
Oh, okay. I
yeah,
gotcha.
and, because those things are big, it takes a lot to make them. 'Em. They're full of hydraulic fluid, and, they catch on fire,
Yeah?
and they're not that clean, okay?
No.
Now, but the major problem with the renewables is what nobody talks about, and that is it takes $3 in renewables to bring about the same amount of consumable energy as one in fossil fuels.
Wow.
Now,
That's
I
crazy.
mean, when God
Wow.
made all this stuff,
Yeah.
it's just a fun it's just, short people aren't as good in basketball, okay? And wind doesn't convert to energy as well as fossil fuels, and nor does solar energy. You have to put more money, much more money into it. And you've seen that, that in that episode of Landman, Tommy talks about the use how the oil companies are using the wind energy as what I refer to as remote energy. They can't get electric out into that area of the Permian Basin. It might not ever get out there, and because it's so out in the middle of nowhere, very much like what we're doing. And, so it is important to run their production and their compressor stations and everything. I will say this: electric is great for pumping units, a
Yeah.
little more expensive for compressors, but when you're running it off of electric as opposed to your own natural gas, it's just mechanically less maintenance, okay, better production time. And that's why these oil fields, you know, they want those pumping units to run 24/7. They want
Yep.
their compressors to never shut down because of, a lapse in gas volume or whatever. It's just easier. And that's what they like. So they bring in renewables to provide the necessary electricity that they wouldn't have otherwise. And I think that's a great market for renewables. Okay. Remote energy is very important, and renewables can deliver on that because many companies are in a position where, hey, I don't care how much electricity costs, we need it.
Right.
Okay.
Exactly. Right.
So that's a good area for them. But as far as payout, as far as return on investment, they're just not there. So you're not seeing the private capital coming in that invest directly in the windmills and the solar farms. You're just not going to see it. You're not going to see it because it doesn't make money. And I think it was Chevron or Exxon Mobil committed
Yep.
to a certain budgeted amount of renewables. I believe it was primarily wind, but it had to meet a benchmark or a hurdle rate of 6 to 8%, and they didn't make it. you know?
No, not even close, actually.
Not even close. And so,
And it takes go ahead, I'm sorry.
that's the real problem, you know? And right now in our country, the most sought after product for investment in the oil and gas industry today is oil. And it is in the context of non conventional development. Okay. And so what we do is we drill wells that are not as deep, not as expensive, and produce from a conventional reservoir, which is trickier, but with a little bit better permeability than a shale. Okay.
Right. Well,
So,
going back to a comment you made earlier in the podcast, you talked about how the oil field is very mysterious, and so I don't know if I think I have shared with you how I got started. I was in trucking and logging here in Montana, British Columbia. I had quite a program. I had 1,200 builders in my program, shipping logs, Cabela logs, Cabela stores, Bass Pro.
right,
Any of those logs that's
right,
in there are mine. We would sort a gun barrel out of the forest, so 60-foot perfect log, and then they
right,
could handcraft that and produce a product. So that was kind of the industries I've been in. I've never really had a job necessarily. Always
right,
a job is just over brooks. In some
right,
ways,
right,
I always feel like I've been a pioneer my whole life. But then when I talk to a guy like you, I'm like, man, I am so cautious. I have no guts, whatever. I just was like, I just listened to some of this stuff time, and I'm just like, man, people are amazingly courageous,
right, right.
and,
Well,
and you know, go ahead.
yeah, and the oil industry is the largest industry in the world that everybody nobody that nobody knows anything about. Okay. I mean,
Yeah,
everybody understands the financial service industry. Everybody has a pretty good idea of the auto industry. Everybody has a pretty good idea of the real estate services industry. Okay. And manufacturers. But the oil and gas industry is very complex. It's very confidential. And it's not confidential because oil and gas companies don't really want you to know what they're doing. They don't want their competitors to know what they're doing, you
right.
know? And so,
Well, can I talk to
mhm,
them and say,
sure.
I said this actually yesterday on a conversation I had a guy out on the Permian, and I said, "Well, I think I'll end my career with the idea that I actually know nothing." Like I feel like every day I'm getting something new, and if people think this industry is huge, it's not. It's just a few thousand decision makers for the whole world. It's not as
Mhm,
big as you think. There's a lot of
right,
people running around doing tasks, but in terms of the footprint of the number of people that I can try to get to make a decision, it's very small. So when I'm
right,
trying to sell and push product out to these rigs or whatever I'm doing, man, getting to that one person, is so hard. And it's a lot more of a club. It's hard to get
right,
in. If you don't have ethics, if you don't have character, you're not in. You've got to be introduced to get in, whether you believe this or not. This is how I see it. I felt like I had to be introduced by Bill Dobbs at American Gilsonite with Weatherford when they said, "This guy's okay. He's not going to
right.
rob you. He's not going to
Yeah,
steal from you. What he says he's going to do, and he actually calls when there's problems." You know what I mean?
right,
So
right,
this industry is so driven by kind of kind of a small club. And you might disagree with this, and you can if you want, but I see it this way: is that the industry is mysterious, and like I'll say at least once a month. Well, when I figure it out, I guess I'll be done, but I'll never be done because I can't understand it sometimes.
right,
So, what's the trend? And I feel like I bring in the right product for this right set of trends coming, and then nobody's interested.
right,
So
right,
how did I miss this? So
right,
it is mysterious, but I think it's driven by character more than people think. They think it's wildcatters and they're going out there, they're going crazy, they're just da da da. No, these are some of the brightest, smartest people in the I want to support the oil field industry for that reason alone, is I've met nothing but just the greatest people in the world. Truly.
right, right, right. And let me say this too. There's nothing more exciting, challenging, and necessary than vertical exploration. We're still going to need that. Okay. And there's still areas that need to be tested much deeper, but you've seen the trend move to horizontal drilling with multi-stage fracking. And I always say that entire line because that's what it truly is. It's
Right. That's
horizontal
exactly
drilling
right.
combined with multi-stage fracking. And typically, you're looking at a sand propping agent or a slick water sand frac as being your primary your type of frac treatment. But like what you were saying earlier, with Weatherford and all those guys, they've got their own little, like, the ingredients and what they're doing with a lot of different things, and frac companies with different types of sand. It makes a difference depending on what reservoir you're in. So those service companies, they put a lot of money in what they're doing, and they don't like to see another service company just emulate it so easily. It's not good for business. So that's why they're concerned like that, and they have rights to be concerned.
Well, and I won't mention the name of the company because I deal with them, is the one of their lead tech procurement people that, I ended up visiting with him in Houston in August. He was basically telling me that, I won't name the company, but that they actually develop nothing. Like, they buy stuff from me, I stick their label on it. You know what I mean?
Right.
They are worldwide. They're just, if I told you, you know the name, but I'm just saying they have all this worldwide capability. They do more out of the country than in the United States, on and on, and they don't really develop anything.
Their
They
their
just
focus is just their focus is distribution, you know?
Yeah, they don't care nothing about developing a product to get us to solve a problem. They just, they come to us and say, "Hey, just put it in this pail. We'll send you the pail sometimes." Sometimes they just tell
Yeah.
us to pick one, and then we stick their label on it, and it's our product, but
Yeah.
they develop nothing, you know?
Yeah.
And it's fascinating, and that's something I don't understand too, because this is a multi-billion dollar company. Labs, I'm sure, could be developing
Mhm.
all kinds of new technology, and they don't.
Yeah.
They just don't.
Yeah.
It's
And
interesting.
there are some great service companies out there, not just service companies, but oil field equipment companies that, I don't want to go into confidential information, but certain parts that you acquire that work better than others in certain areas. And when things don't work exactly the way they should, they'll fly somebody from Houston out
Sure.
to Appalachia, to go out and to consult with us on how to use whatever product it is, you know?
Right.
And there are other times where, there are companies out there when, and I don't want to go into specifics on this, but when you're in a horizontal well program, there are times where you have miniature crises that you have to resolve in the wellbore. And
Wow.
there are literally big oil, and I have to give this to Big Oil. They own subsidiaries that specialize in those various crises, and they will be to your location in 24 hours.
Isn't that
Okay.
amazing? That is
Yeah.
amazing.
Yeah.
That's
You'll see a
awesome.
guy fly from one city to another city, get in a truck with a trailer, with equipment, an engineer that knows what he's doing to show up on your property. And it does cost some money, but you're very happy that he's there. All right.
Yeah. I
So,
wanna I wanna kinda do go into 2 areas, or we're gonna just go forever, you and I.
sure, sure.
And not being rude, but I wanna talk about the investor side of it. Like, and just
Okay.
as full disclosure to everybody listening, today, is that I'm an investor with Steve. I kinda came across this, from a radio ad that he does that is, very well done, and again, I had no idea what I was getting into, and again, this is to Steve's credit. He's a great teacher, as you can tell, just in the first half hour here, how much he cares about it. You can see the energy he has for it. I absolutely love getting on the phone. I told him this before, that, there's sometimes I just don't want him to hang up, because I do enjoy speaking to him about this subject. But as an investor, and I'm hoping I'm a good investor. I think I am, in the sense of, is I just extend trust to you, because I really know that you know what you're doing. I've visited your site, I think twice now. I'm actually, my wife and I are planning to go out that way to see family where I come by again. But the
Right.
thing of it
Right.
is you make a site visit, you see the difficulties, you see what you're doing, but you're still moving forward. That's what's exciting to me, is I see this guy that just plows straight ahead, when I know a lot of people would just quit. I always tell young people when they're trying to start a business, not quitting is winning, because everybody quits.
Right.
Very few, it's a 3 to 5 year process. You tell them it's three to
Right.
five years and they can't believe what you're telling them. And it's a fact. It's just true. You might even be an order taker in 5 years, but it takes 5 years,
Yeah, it does.
and
It does.
it,
And
it go ahead.
And back to the investor, there's these beliefs that the oil and gas business is risky, it's a gamble, and it is, let's say, a get rich scheme.
Yeah, there you go.
None of that's true. It's
Right.
not a gamble, it's calculated risk. And you
100%.
calculate your own risk, and everybody, depending on the prospect and where you're at and everything, you have different methods of risk mitigation. And so to us, the strat technology and evaluation and mapping, and even more importantly, closeology. Okay. Let's just be blunt. When another company is successful and they're making really good wells, then you're going to see other smart companies moving in because everybody's looking for, hey, where is that trend moving? It can go in any direction. Okay. And so, the strat technology really comes into play there because it gives you at least data on one or two wells. Once you drill a horizontal as an extension of that producing area, then you can look at that mud log, you can look at everything, and you can create more proven locations of much higher probability. And that's
And
how it grows. All
yeah,
right.
and investing with Encore too, is you become a partner. It's a true ownership deal. I own a percentage of whatever
Yeah.
all wells I do it. I'm very systematic. I kind of figure out my tax situation, and then
Right.
I figure out, okay, I need to do whatever amount to offset that or I kind of think that way. So, but I do believe, like, for years I was told as a young man to put your $200 a month or $1,500 a month into mutual funds and this and that. And I lost that money 3 and 4 times over, just a short period of time. And 2008 was a real
Hmm.
thing for me, as I've shared with you. And again, I would rather own I'm owning black gold, is in my opinion.
Right.
It's black,
Right.
it's gold, it's an
Right.
asset, it's real. I can touch it. And I actually have a percent ownership as an investor with you. It's a way different way for me to see it because I trust me, I don't trust equities. Just like I mentioned in the story earlier about DA Davidson, they're failing 9 out of 10 times. That's how
Right.
poor it is. And people,
Right.
well, I'm going to do the mutual fund thing and I'm going to compound my interest and I'll have this much money when I'm 59 and a half. It just doesn't work that way. And the truth of
Right.
it is, no one's telling you that. So
Right.
when you say, oh, it's a quick scheme, get rich quick scheme, or whatever, all those kind of things, it really is a great investment because you're actually grabbing onto an actual hard asset. You do own part of this. Am I right?
Right, right. Exactly. And we own, to kind of go into that, a lot of times people invest, they'll go through, an investment company, other intermediaries, a non-op company, and every non-op company has a contractual operator, and that
Sure.
operator may be drilling on a farm out lease. We develop leases and own 100% of the working interest across all the lease. Okay.
Right.
Encore serves as the operator, the lease owner, and we control all facets of drilling. We control all facets of prospect development, lease acquisition, drilling, completion, fracking, and production. Okay,
Wow.
including the gas that we have to sell in order to move the oil in the wells. And our projects are 95% oil, but they're gas driven reservoirs. So we're very careful in how we slowly move gas off of a well over time, where we can get both a really good flush production volume, but at the same time, we don't denigrate or decrease the potential and future years of production because the model of Encore is a little bit different. We have a tremendously great tax benefit. Okay, let's talk about that real quick.
It's
Because
amazing.
of yeah, because there are no intermediaries and because it's horizontal drilling, which is almost with fracking itself is about 100% intangible. You're looking at a first year 87% intangible drilling cost deduction. Okay.
Yep.
Then, you're looking at the tangible side remaining of that being amortized over, I believe it's 5 years. And then you're looking at 15% depletion deduction across the production of the life of the well. Okay. And it's great. There are no tax benefits that even compare. That's not why we do it. That's good. And I like that because it gives the investors an upfront cash, call it a return on investment of whatever it is. They can typically deduct against state and federal income. And in some states, that's a whole lot.
It is.
and it's a tremendous deduction, and that gives them something while all the mud and dirt and steel is hitting the ground, okay?
It takes time,
And
right?
it takes time, and then when you drill the well horizontally, you run pipe, you cement the pipe in, and that's before that, you've gotta build, locations on the side of mountains, and it's very challenging.
Crazy.
But, then you've gotta perform a multi-stage frac treatment where you have to bring in 20,000 barrels of water for the treatment itself, and then you've got to equip the well and enter into a flowback period. Oh, I forgot, we have to mill out the stage plugs. The
Right.
drilling rig moves back on location to mill out the stage plugs.
Plugs. Yeah.
Then we open the well up. We do not flow these wells. We do not flow them. We keep them pinned back and we put them on pump and we enter into a pumping flowback situation, which is, right now we're just about to get out of flowback on our most recent discovery, and it's already jumped up over 100 barrels a day,
Wow.
and we haven't let any gas off of it yet. So it stays
Wow.
in, lower than that right now, but we're looking at some really good rates there. And, but we want to achieve good rates without pushing the well too hard. Okay. And so we deliver a good flush production that you're going to see on all of your horizontal multi-stage fracked wells. And then we're going to see, a decline, but we want to kind of mitigate that decline as much as possible to ensure that we're able to recover all of the reserves from that well over 15 to 20 plus years of its life.
Yeah. Well, you've mentioned, I'm sorry, you've mentioned to me like sometimes investors will call and they're treating you or talking to you as if they're talking about a stock, you know,
Right.
and I guess I probably came into with the right perspective is I know how long it takes for to develop these things. So,
Right.
I have on my whiteboard in my office and skills to be developed, and one of my skills is the skill of the ability to wait,
Right.
be patient. And
Right.
I want to be patient. I understand good things are coming. I'm hyper optimistic. I'm a half glass full
Yeah.
guy. No matter what I don't care what's going on. It's great.
Yeah.
So
And
I have, go ahead.
we drilled our first well extension of this productive field where we're at, and it's made a fabulous well, and we're very excited about it. We've drilled a second well that is also successful, and if you remember yesterday, you got an email detailing
Yep.
our plans for the frac and how we feel about, we're basically doing the exact same thing over again. And that's
Yeah.
what we really strive to do. Same equipment, same process, same people, same plan, but different numbers. Okay.
Right.
Because the well's located some offset to that well. And the reservoir changes on every well to some extent. Okay. It moves up a little bit, moves down. The pay you cut is more or less a little bit. There's differences. Okay.
Yeah.
But the overall well plan is exactly the same, and that's what we strive to do is to make it as identical, replicate this success again, do it here. Replicate that success and do it here. Ultimately, we're building an asset over time of many different horizontal wells following the successful trends. And like you and I have talked, there are companies that are coming into Eastern Kentucky and the Appalachia and acquiring companies and acquiring their assets. And, I think one of the reasons they like Eastern Kentucky is because it is so close to the Northeast consumption.
Sure.
And we sell all of our oil to Ergon, and Ergon is an amazing company. They've acquired the oil gathering companies in Eastern Kentucky. So you're seeing this move of big oil into the acquisition mode into the Appalachia Basin,
Yeah.
which hey, is good, okay,
Right.
because that not only provides more energy coming out of Appalachia Basin into the Northeast, but the oil that's produced where we're at and across Appalachia is good, mid 30, a little bit higher gravity oil, which is exactly what US refiners are looking for. Okay.
Yeah.
A lot of your shale oil is much higher gravity, lighter, thinner, and a lot of that oil is used in Canada and other places and exported because we have to actually import oil from like Saudi Arabia because it's more like the oil we produce and more preferable by our refiners of gasoline and diesel fuel.
Right. Well,
Okay.
that leads to a good another thought I've had is, you're talking about the different types of oil. Like Venezuela has a much different oil situation, right? And I mean, you know a lot quite about that, but we have all kinds of things going on. If they're exporting oil from Saudi Arabia to here, and oil's moving all over the world, we have things going on. Mike Huckabee this morning, I don't know if you heard this, that he told all his staff to, if you want to get out of Israel by today, you need to leave today, essentially,
Right.
because we're getting ready to have a conflict there. It seems like that's inevitable. We all know the history of, Iran and the regime there. It seems as though it's going that direction. And he's made that announcement this morning. But you got us, I think, and sometimes not trying to be political, but I do believe President Trump sees that the hemisphere here with Venezuela, Greenland, all the different talks that they do, they must know something we don't. But all these moving factors are related to energy and resources, and Iran. Again, in terms of our discussion, you must be even at you're in there in Eastern Kentucky, you've got to be thinking about these things.
Absolutely, and I think it's important to draw a comparison between Venezuela and Iran, and not a political one, not a culture one, but what is the oil like? And in the Middle East, they have fabulous reservoirs over there. Okay.
Right.
And they have really good oil, really good reservoirs, and 20% of the world's oil supply moves through that Strait of Hormuz, yeah,
Yeah.
right through there. It's 20 miles. It's not
Right.
very wide. And so you've got that. Then, Iran has 2 to 3 million barrels of oil, probably could do more. And they have pretty good reservoirs. All Saudi Arabia, all of them have good reservoirs with lots of good oil production. All right. Now, Venezuela. Okay. And you'll notice if you looked at the oil prices really didn't change much when the conflict when Venezuela was at its highest. I mean,
No, I
and the
actually think it
reason
went
why,
down.
look, guys, it's real simple. Venezuela really doesn't have that much oil. Okay. Yes, they've got oil in the rock underground, but that oil on average is 28-degree gravity. It's very thick. And people
Yeah.
immediately say to me, well, Steve, they can refine that at certain refineries in Houston. I'm like, yeah, that's not the situation. The situation is when it's thick, it doesn't move through the rock very quickly. Okay.
No.
And if you
No.
see pictures of the oil fields in Venezuela, you'll see all the rigs and pumping units so close together because when it's thick, it doesn't move fast and it doesn't drain a very large area, which
No,
from
it's
an
like
oil and
pudding.
gas, yeah, you don't hear any conversations about new wells being drilled. You've got
No.
about a gross amount of 1 million barrels a day coming out of Venezuela.
Oh, that's
And
nothing.
a good portion of that goes to China and other places that the US doesn't really want to see it going there.
Right.
And and then, you've got majors, I believe it's Chevron that has a mineral interest there. And, when everybody looks at everything, yes, that area can be reworked and it can be brought back to better production, but you're talking like at best 50% increase in production, but these wells are already declining. And it just doesn't matter. I mean, when oil's heavy, even when they hit it with steam and do all these other things, it doesn't make a big difference and it moves slow and it costs money to move it. Not
If
in
you've
the
ever
pipeline as much, but underground, getting it out of the ground because not only does heavy oil move slower through the rock, but it weighs more coming up out of the ground. That's
Yep.
called hydrostatic pressure,
Pressure.
pushing
Yep.
back down on the reservoir pressure, which means it's coming out slower.
Yep.
Okay. And so that hurts the economic cash flow model for any type of drilling and production program. It just does. Whereas the shale wells here in the United States, they've got that real light gravity crude, 50, 45%, 45 degrees gravity, whatever. It's
Right.
thinner, it moves fast, and everybody knows that a flush production fracked shale well comes on screaming. And when it's screaming, it's returning cash flow. All
Yep.
right. And So that's the point, that's the difference. And so, from the perspective of big oil and exploration, back in the 80s and the 90s and everything, they were all focused on, like they have been forever, vertical drilling and staying up at night worrying about whether or not they're going to make a well on this new, are they going to make a discovery? And there was a large information tree there where if we're successful here, then we do this. If we're successful, then we do this. It's nerve wracking. And
Yeah.
so, what larger companies have done with the shell play is, in a sense, they are, and a lot of people in the industry say this. I said the zip code earlier. You'll hear
Yep.
people say farming oil and natural gas, and that's what they're doing in the Bakken. That's what they're doing in the Permian Basin. That's what they're doing, with natural gas in the Haynesville Shale or the Barnett Shale or the Marcellus Shale of Pennsylvania. They're farming oil and natural gas.
Yep.
And what causes the lease prices and bonus rentals to be so high, where people are paid these enormous amounts of money for their mineral rights to be leased, is closeology. Every
Yep.
major is coming in, getting their piece of the pie, and that means they're writing really big checks. Okay.
Yep.
And in our area, we have to find the pies, and we have to locate the pies, and the pies are smaller. All right.
Yeah.
So, there are a lot of similarities between what we do in the shell play, but there's also a lot of differences. And I do believe a higher ROI model, because we get into areas of conventional reservoirs that are low perm, but they're a little bit more frackable. Okay. And so, you get better results. All right. And the wells are shallower, which makes them much more less costly to drill. At the same time, we're in the mountains, which makes things move a little bit slower. So, you've got there's a lot of factors. But what we
Yeah.
really like to do is we like to get into an area, and then once we drill, we move a lot faster because we've already got infrastructure built coming from the first well. Like the well that we have right now, we moved 2 tractor trailer loads yesterday. We were real excited about that.
Yeah. I
And
saw that.
and we're in the process of developing infrastructure on that lease that not only facilitates that well, but will facilitate all of the other wells being drilled. So when we get to those wells, we've already got that infrastructure in place so that we can move faster. And so, back to the Iran thing, the Mid East, when we've got Iran, you already see the oil price, the anticipation there. And yes, it will go up. But he is, since 2014, we had 3,500 rigs worldwide active. We had 1,800 rigs active in the United States. Today, we have around 1,400 to 1,500 rigs active in the entire world, and
It's
only
crazy.
around 500 active in the United States. All right. And yes, we are achieving highest production we've ever achieved through all of the production from the shale revolution, the Permian Basin. But those reservoirs here at home and across the world are working harder, which means they're giving up more pressure to keep up with the world demand. And, when you're on the news and you're watching about oil prices or there's commentary, how many times does somebody talk about reservoir pressure? Never.
Right.
Okay. And so the fact that we're not drilling enough wells that will deliver the flush production needed to offset decline over time, we're pushing the wells really hard across the world. Every time that we beg for more money from Saudi OPEC, and I call them Saudi OPEC because Saudi is kind of they're the star leader. Every time we do that, we are increasing the market share of the world oil for OPEC. And that's the only thing they like as well, and maybe even better than the price. Okay. because their break evens are not the same as our break evens. Their break evens are much lower. And so if they can push it down a little bit and increase their market share, they know that they're going to be able to recoup that when prices go back up because they'll control more of the world market. Okay. Now let's go back to the oil field. On all oil fields, you got oil producing and you got gas. All right.
Yeah.
Your gas allows you to adjust pressure so that you can increase or decrease volumes of oil. That's the way it is around the world. And so in Saudi Arabia and different places, it's not like they're sitting there with tanks and they just turn the valve a little bit to the left. You know, if they increase production, that's because they have to lower pressure on their wells. And if they lower pressure on their wells, they eventually have to fall back off of that, which results in a production cut. Okay. So it works in harmony. They don't want to pull on their wells too hard because then that takes away the longevity and the total reserves that they are able to extract from their reservoirs. You know, and so having U.S. production is not only important because it provides us with direct oil production that we can use, it's also important because we have to keep a hold of our world market share. We
Yep.
need that. It's so important. From a perspective of jobs and GDP, the U.S. oil industry brings in about, I think it's 8% of the GDP. But when you get in a down oil market, that goes down way low. So if money's not coming into the U.S. oil drilling and production market, then people are not working and the GDP is pulled down. And that can happen just because of a $10 interval. And what's his name? Harold Ham. He is a
Harold Hamm.
brilliant guy. Yeah. He is one of the, I wouldn't say the founding father of the shale revolution, but he's up there. All right. And he made the statement that U.S. shale producers need $80 oil. Well, they really do need $80 oil if they're going to deliver to their shareholders the way they want to, okay? Because horizontal drilling is expensive. And when they drill these shale wells, they are making oil, they are making condensate, they are making natural gas liquids, and they are making methane. And they
Yep.
combined it under a barrels of oil equivalent report, okay? But it costs a lot of money to strip that natural gas of those liquids, and it costs a lot of money to build out the infrastructure to support their oil production. Okay. And so they're very expensive. And so they need $80 oil. Really, they do. Okay. They're not, now 70, they do pretty well. You know, when you get down in the 60 range, it makes a big difference. Okay. Yes, they have reserves. Yes, they have good, solid cash flow, but they're not really delivering on the earnings that they want to do or they need to do to warrant more drilling. And this has occurred over and over again. They're just not drilling as much because it's expensive and they're not comfortable at a lower oil price. And that's going to come back and create a pendulum swing where you're going to see it. And look, on the landman, Tommy says, I think he said something like, we got to figure out something to replace oil before we run out. And that scared everybody. I'll tell you, I do not believe we're going to run out of oil. What I do believe is we're going to run out of cheap oil.
Yes.
We're going to run out of cheap oil because every well that's being drilled across this globe is going deeper and into tighter rock
Right.
because oil and gas companies, I don't care what anybody tells you, nobody sets their best prospects aside for a better time or a better period. They drill them next. And then
Right.
they drill the second best one next and the third well next. Nobody does that. Okay.
Right.
And so we're always drilling the shallower, more predictable, more prolific areas, and then going to from our tier one to our tier two. And you've seen the shell play. The shell play is likely in its seventh to eighth inning.
Yeah. Go ahead.
Okay. Hey, going back to the investor, what we are looking for at Encore, and we have fabulous investors like yourself, they are of the pioneer mind. Okay.
Yeah.
And And we put together projects that are high probability PUD locations that we feel are 90% or higher in probability. And then we allow investors to come in at the closest to wellhead price as possible and diversify with us on wells as we have more data from the wells that we drill and data from other wells that are being drilled. We've got right now, I believe, and I believe you're involved in the majority of these wells, but we've got around 7 in our foreseeable future that are completely vetted and ready to go for drilling. Okay. And we've drilled 2 successfully, 3 actually, 3 successfully, and our newest well in production is doing fabulous. And we anticipate the same on the well that the second offset to that well. And we're drilling another offset to that well and 2 more offsets to that well. And then we're drilling project that is up to the north. I don't want to disclose locations or anything, but you know which one I'm talking about.
Yeah, I do.
Offset
Yeah.
to what I would say big oil in a well that was fabulous that was drilled about 8 years ago and very difficult to get that lease, but we have it. And I think I sent you the engineering plans just a few days ago and what we're going to be doing there. So we're excited about that project a lot. And that is also a bona fide PUD drilling location. So yeah, with the investors, we want to give them the very best locations. We want to put all of our passion, everything we can to win into every single project. And I think you see that when you're on location with us,
Definitely.
and it's not only exciting, it's only really exciting if you win. Okay.
Yeah. No, that's
And
right.
and so, we want to win on every single well, and we know we are not going to guarantee that. That would not be right. There's always risk. And like I say, we are in the risk mitigation business.
Right.
But
Well, I'm gonna do a real quick thing here. I'm gonna share your website if you okay
okay,
with that. I'll
sure.
just do that. I'll point them to that and how to get a hold of you, that kind of thing.
Right.
Just give me a second here. I can just share your page. Let's see here. But I think it's a good way for people to get a hold of you. And just let's see here. Here we go. Share, and then they can see all that. But like this is the main page, if I'm right. Yeah.
Yeah.
And then up top there's about, you can check out and read more about the mission statement. And there's you. That's
Yeah.
exciting. And latest news. And again, if you do want to be an investor with Steve, he will visit with you. He'll train you. He'll teach you. Again, like he talks about the emails, even in our podcast today. Uh, uh, he had mentioned a couple times that he sent emails, different engineering plans or updates, or we shipped a couple loads and stuff. Again, I don't know how he has time to do it, but it's an amazing amount of information that he pours into the investors. Probably to just keep us updated, to ease our minds, to see the progress, whatever the goals are. But he's a great writer. I always tell him that. I read every word of his emails because he's such a good writer. But you will be updated. You won't be in the dark at all on this. And uh, again, and here's a contact page. It's pretty simple. Complete the form. There's a phone number there as well. And I'm assuming that's your phone number direct, Steve.
That is correct. That
Okay,
is correct.
so that's a direct phone number.
That's direct to
Um,
me. Yes, it is.
Yeah, and talk real quickly about as an investor about being the SEC accredited kind of situation with it. They need to be able to meet some standards.
Sure. And if you read our website, you'll see we're straight up with the risk. Okay. It's oil and gas. Even if, horizontal drilling and fracking mitigates a lot of risk. And it's not really about hitting dry holes. It's about whether or not the well that's drilled and completed for production meets your desirable targets for volumes and total reserves. And so, yes, there are risks involved, and it's only suitable for what the SEC defines as an accredited investor. And really, the majority of my investors are accredited multiple times over. They're high net worth investors. I have a lot of people from all over the different occupations, from investment bankers to a lot of U.S. farmers, and a lot of people in real estate and construction, and just a lot of really great minds. And what we really like to do is be very transparent. When I was I guess, cutting my teeth in the oil and gas business, I was in charge, representing a non-operating company, going out and kicking tires and getting information about exactly what's going on every day, every hour on drilling, completion, production. And so that's just kind of a part of me. And so, Encore investors are always stating how many reports they get, how updated they are. And you know what I really love doing is every time we have an oil and gas tractor trailer pull up on location and load up with oil, a copy of the run ticket and a photo of the tanker on location is immediately emailed out to the participants that have direct working ownership in that well, you know?
Yeah.
And I guess you've seen those ones like yesterday, and you see those a lot. So that's what we want to get to. We want to get this entire field up and in production and moving lots of crude oil. And this crude oil is picked up at our tanks and it goes direct to refinery. And we get paid directly from Ergon. So we keep it very simple. The production revenue statements that go out every month, those include a breakdown of lease operating expenses, the exact amount of oil that was shipped that matches up with the run tickets that you already will have, and also detailed statements and a copy of the actual refiner statement that goes out to that particular well. All right.
Yeah. Yeah.
Yeah, so we love doing that. And then, as far as the tax K-1s, we have a CPA firm that specializes in oil and gas, and I provide investors immediately with a redacted copy of the K-1. So before they even make the investment, they can provide that to their CPA, and it's designed so when your CPA sees it, he goes, "Oh yeah, I get it," and it makes it a lot easier, you know?
I do my own taxes, and people probably can't believe I do my own taxes, but I do. But it really is a simple process. It's super easy,
Yeah.
and you guys make it easy. And Dara, I'm saying her name
Yeah.
correctly.
Yeah.
She's an amazingly nice
Absolutely.
person.
Absolutely.
she's
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 fantastic.
she always sends these emails too. Like if she responds, I always feel like I'm talking to. I mean, a friend. I mean, she just sends them in a way that you can just tell she's super sweet. And maybe I'm
Yeah,
wrong, but
she's great. She's great.
yeah,
We've got some we've got some really great people, and I'll just tell you something a little funny, in the oil field, since COVID, it cut out a lot of our workforce. And that's another reason why you're not seeing
interesting.
a lot of drilling because there are less service companies, less crews, less workers, and what you're seeing in the Permian Basin is a buildup of specific crews, equipment, service companies, and everything like that. But overall, it's down significantly. And that's another reason why when lower oil prices come through and COVID occurred, things slowed down. But honestly, that's the best time to invest because so many investors want to come storming in at $90 oil. And at that time, costs for everything are going up. The cost to get in, they're going up. I believe $60 oil is really the best time to invest because we're still making very good money. We're moving forward. And then you get in at a price point where when we do get back up into 70 or 80 or even higher, you make off better because you're in a lower price point coming in, you know?
Right.
And so my objective on Encore is to make the very best wells because they're going to create a valuation for Encore in the event of an exit to big oil in future years. That's a very realistic possibility, and that is we are continuously grooming our company, grooming our leaseholds. Everything from drill site title opinion to right of ways and gas line and infrastructure and creating one large asset that can be delivered to big oil just by filling out some paperwork. which in turn would
Exactly.
deliver, and we would only do that if it delivers a very, very good exit strategy for the working interest partners, which includes Encore Energy.
Yeah.
Okay.
And
So,
yeah, as we close out today a little bit, just to speak from my perspective, I'm on this third or fourth layer away from where he's at. He's on the front lines. He really is in a war. I think he is. But for me, I'm kind of serving these kind of guys. I'm serving folks like Steve, and they don't even know who I am. I'm far removed from the front lines of the war, but as an investor, just me talking Mark Workman, just on the outside, let's say I knew nothing about the oil. It's been an absolute pleasure. The amount of training, Steve, that you can see in this podcast, everybody. The guy, I think I could go. He would never let him stop. He just talk and talk, and it's not a negative. It's a positive. His passion comes through. He cares about it, and I'm telling you right now, he'll treat you the same as he does his work at the oil field as an investor. So I always want to promote these things. And this is a follow up. Steve and I want to do these more and more, and we can get into really specific topics about the oil field. It might not be interesting to everybody, but I guarantee you, Steve, I know people that will watch every word because they're interested in learning. And
absolutely.
yeah, so
Absolutely.
it is something I want to do again and again if we can over the years and maintain that connection because I think it's a great training tool about how America even is going to stay alive. Energy is everything. Again, it's almost like you said, it's almost the ignored industry, right? It's mysterious. Yeah, if you one of your words again, it's mysterious. It's almost ignored. It's not thought of. I'll tell the story real quick before we close. When I got started in this, I kind of had a big financial blow up in 2008 with my logging and trucking and had people. It was all kinds of wild stuff, and I was regrouping. I went to a seminar out put on by Wells Fargo on the future of energy. And future of energy was oil, gas, and coal, oil, gas, and coal, not wind and solar. And they basically see the subsidies. It's got to be subsidized to even work. It can't stand on its own. All those kind of things. So I thought I was going out to learn about wind and solar, you know. And then I come back with, okay, well, it's oil, gas, and coal. So, and that's really the truth of it. That's where it's going to be. It pays its own way out of the ground, and and it creates an economic advantage for whoever is going to choose that as its main energy source, right? So
Right.
again, I'm a big believer in the oil field. I'm a big believer in these people I talk to. They care about the country, and it comes through all the time how much they just care about the future of this country, and they
Right.
know energy is a very important part of that.
Yeah, and just one thing I'd like to say is, with this new non-conventional horizontal drilling and multi-stage fracking, the oil industry is cleaner and more the reason why is, first of all, horizontal drilling, if you look at the traditional vertical drilling, a square mile to develop a square mile, you may drill 20 or 30 wells. That means 20 or 30 casing. That means 20 or 30 flow lines, tanks, roads. And I consider all of those risk points for pollution and
Sure.
environmental problems. So when you're producing from 4 wells that are producing more than the 20 or 30 wells would have produced, you're not only getting more well out of the ground, but your environmental impact is much lower. And when
Yeah.
people come and visit beautiful Eastern Kentucky, they see the people there care about the environment. And we are cleaner than we've ever been. We can't control what happens to oil after it leaves production, but we can control and we can minimize the effect on the environment. And we do care very much.
Yeah, you do. Again, not to, keep hammering at it, but it's just something that, I care about it. It's what I want to promote. I want to promote my people. I have other things I want to do in terms of podcasting, in terms of other things I want to talk about. But really, I want to promote this subject as hard as I can, And again, it came up from just me laying in bed one night thinking, I think I could do a podcast and I could
Right.
promote my people, my industry, because I always feel like we're the getting the boot kicked to us. I read articles and I'm like, my gosh, we're saving the planet, but it's
Yeah.
always the opposite, and it kind of drives me crazy a little bit. So
Yeah, and you hear a lot of that from the left, but the fact is, I wish And, that's one thing I am grateful for about Landman. It's got people talking,
It's
it's got people
it's true.
inquiring. It's got people excited about being more aware of how the oil and gas industry actually operates, and that's
Right.
good.
Right. No, it is good. Well, let's close her out again. I encourage everybody to become a pioneer of their own life, pioneer of your faith, pioneer in your work. Start stepping out, take a risk, and don't worry about the outcomes because most likely, if you're going for it, something's going to come back good your way. In my opinion, I
And
might
make
be
sure
wrong.
you're having fun.
That's the key. I used to have a motto, whether you believe it or not, every day's a Saturday.
Yep.
Basically, and it was on the bottom of my letterhead, every day's a Saturday. I still get teased about it out in Fairfield with the farmers. Workman is every day a Saturday. They tease me,
Yeah.
and I go, sure is. I have a ball, because I enjoy what I do. And it comes through with you too. There's no sense doing something if you're not going to enjoy it. So
Exactly. You got to love what you do for sure.
yeah, hey, appreciate you, Steve. Thanks, and we'll do it again.
All right. Have a great weekend. I'll talk to you soon.
Uh-huh.
Thank you
Bye-bye.
again.
Yeah.
Bye bye.